Hi everyone, let's cover my Elliott Wave scenarios on Bitcoin on the daily and the 4-hour time frame. And as Bitcoin is ranging sideways, the alts are absolutely flying, which is great to see, and hopefully you are part of some of these moves. If you're interested in alts, check out my altcoin playlist. There's a lot going on, including a 4-hour live stream where I covered 30 different alts. Timestamps are in the description. So let's cover Bitcoin. First scenario on the daily time frame, which at this moment in time is probably my primary scenario. And that is a diagonal 1, 2, 3, 4, 5 wave structure. And after wave 5, we look for a retracement to the downside. In a diagonal, you like to see overlap between wave 1 and 4, which we got with this move to the downside. And wave 5 to the upside should be a 3-wave zigzag family structure because of wave 3 and wave 1, which I will cover in a second. Now, after wave 5, we're looking for a retracement, and this is very, very important. For the bulls, the move to the downside here after the diagonal has to be corrective, and preferably after a diagonal, which for the bulls is going to be a leading diagonal, you like to see a sharp zigzag family structure to the downside, preferably on a high amount of volume, right? It may mimic a bigger impulse to the downside. However, instead of creating 5 waves, it creates a 3-wave structure, reverses, confirms the 3, and then continues towards the upside. And that is then a great opportunity to join for another leg towards the upside. Bears want to see, after a ending diagonal, a motive wave to the downside. So they are looking for a much bigger 5-wave structure, followed by a 3-wave move up and continuation down. Minimum target for the bears after an ending diagonal is taking out this low at 74.4K. Now you can see that price is moving up on decreasing volume, which is something you like to see in a diagonal structure, but preferably your wave 5 ends on a bit of a peak of volume. The invalidations for this scenario are the red lines. We have an invalidation to the downside in case price moves down at 108. And if price just continues pushing to the upside, we will not complain. But the invalidation for this scenario is 140.4K. Now then let's talk about shortly wave 1 and wave 3, because I mentioned wave 5 has to be a zigzag family structure. And that's because wave 1 and wave 3 can be counted as a 3-wave zigzag family structures. So the move to the upside here, right, is a 7-wave swing. If we just look at it from a daily time frame perspective, we have move up, sideways, up, sideways, up, sideways, up. And if you just label it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, etc., then you can see we basically have a 1, 2, 3, 4, 5, 6, 7-wave swing. And this is interesting because the number 7 is a corrective number. So in Elliott waves, you have motive wave numbers, right? Impulse or a diagonal is a motive wave. And you have the corrective numbers, right? And the corrective number is a number that is 3 plus 4, right? 3, 7, 11, 15. And the motive wave number, right, is 5 plus 4, 5, 9, right, etc. Now this move to the upside can be seen or can be counted here as a 7-wave swing. And therefore, the 7 being a corrective number, we can label this on the lower time frames as a wave W, a wave X, and a wave Y double zigzag to the upside in wave 1 of the diagonal. And then we get to wave 3, which is the recent move towards the upside from 98K. And this move to the upside here can be counted as a wave A, wave B being a flat, another wave 1, 2, 3, 4, 5. Or I say another wave 1, but this is then wave C. So you have wave A, B, and wave C. And inside wave C, you have 1, 2, 3, 4, and a 5. Now in this particular scenario, wave 4 ends around at 0.382 Fib time compared to wave 2, which is okay, which is fine. It ends on top of like the 382, which generally is a minimum target, right? This looks better compared to counting an impulse to the upside, a 5-wave structure, where you then need to count a wave 1, 2, 3, 4, 5. First of all, you can now see that the 0.382 Fib time on my chart is not reached. Wave 4 is not even close to the 0.382, which is taken from the start to the end of 2 to the end of 3, comparing 2 and 4 in time. So that lowers the probabilities compared to an ABC, where your wave 4 ends pretty much on top of the 3A2, which like is a minimum target. So this lowers probabilities. And then we have wave 2 internally, which then has to be like a WX and a YS structure. However, inside this wave 2, as I covered as well, after this happened, the 1.618 is touched, which is taken from this high to this low, as this is one corrective structure, and you take it from the start to the end of the corrective structure. And the 1.618 is a very rare target for a wave B or a wave X, right? Generally, when you touch the 1.618, you're not thinking about a B or an X anymore. While in this scenario, if we want to count this as a single 2, it has to be WXY, or it has to be a wave A, B, or a wave C. And it doesn't make too much sense to give this scenario the highest probabilities, where wave 2 internally hits a 1.618 and wave 4 is incredibly short compared to wave 2. It's not invalidations. The 1.618 is not a hard invalidation. Wave 4 being so short is not a hard invalidation. But in the end, we trade probabilities, and the probabilities from an Elliott wave point of view would say an ABC makes more sense than an impulse. Now, that being said, it then brings us back to the diagonal, right? Because if the probabilities are higher for a 3-wave structure here, we have to consider this particular diagonal. And also from, I suppose, a psychology standpoint, this scenario can be very interesting, because you would push to the upside, preferably wave 5, as mentioned, ends on a peak amount of volume, like preferably a high amount of volume, right? People will think, okay, there we go, continuation to the upside, buy. They're buying the top, move to the downside, preferably takes out these lows, also taking out the stops, triggering some liquidations and all of that good stuff. And then you move back towards the upside for a continuation of the bullish trend, right? In a bullish scenario where it is a leading diagonal. Now then inside that diagonal, we have our wave of 4 as well, right? So wave 4 in a diagonal should also be a zigzag family structure. So we can either count this move to the downside as a finished ABC, and then we look for continuation to the upside, 1, 2, 3, 4, 5. We just don't want to change the structure, really. We don't want to move below 114.2K, right? As seen on my chart. At the moment, I have like a running flat here and an ABC. I think it's very tricky to end wave 2 here and count something here as another 1, 2. I don't like to count this as a single 1, 2 followed by another 1, 2, like an internally 1, 2, 1, 2, double 1, 2 here. It just feels a bit forced in a way, where then your second one is quite a bit longer than your first one. I don't want to go in detail, but at the moment I just made my life simple. I said, okay, unrelated, if there's 1, 2s here, I just would count a running flat at the moment. And all by all, we don't want to take out 114.3K. But the move towards the upside from 111 is quite tricky, right? It's not very clean, impulsive clean per se. So yesterday, I have been thinking about another option. And previously, I had a bigger WXY, where this was W, you get X, and then a bigger Y to the downside. However, when I was puzzling on the chart, just chilling, spending some time, I also covered this scenario here, where we then have a finished ABC. That's your W. Then inside wave X, we have a zigzag structure, W, X, zigzag family structure, Y, flat, right? Expanding flat, right? That's your X. And then we're still looking for wave Y to finish, which would then be a wave A, wave B, wave C, where this move up is then corrective. Now the invalidation is clear, which would be good for the bulls, is 118.9K. Now mind you that this scenario is still bullish, right? You just create another low, and of course we don't like to touch 108K because that's the invalidation. But we do have support above 108K, which is, for example, the 2 point of controls here at 111 to 111.5K, right? So we definitely have something going on here. And I do think this scenario should at least be considered, at least be part of your folders in TradingView, right? This is a bit of a tricky move up. There's no invalidations of this being a or this not being a multi-1-2 or some impulsive structure, right? You really want to change the market structure. However, it is an interesting scenario, and a double zigzag in wave 4 of a diagonal is absolutely valid. So keep it in mind, I suppose. And then on the higher time frame, the bearish scenario, preferably you still take out the all-time high twice. So bearish scenario would be a finished bull market, basically 1, 2, 3, 4, 5. 5 is already finished, looking for larger corrective structures. And then here we have a W, X, Y, and A, B, C, and B. Move down in a wave is C. Wave is C inside B, right? Is then an ending diagonal, 1, 2, 3, 4, 5 wave structure. Take out the all-time high, take out the all-time high. After 5, move towards the downside. Common target for wave B in an expanding flat ABC is the blue box that you see over here, 119.7 to 126.6K. What does impact the probabilities negatively? First of all, it's very early to talk about this diagonal. We are not even inside wave 4, which I prefer. Also, wave A already took out the origin of this wave A. So wave A of wave B already took out the origin of wave A of the flat, which is actually not really common. Generally, the first structure in wave B of an expanding flat does not take out the origin of A. Then you get B, then you get C, which takes out that high, and then you reverse to the downside. So this does impact the probabilities a bit. It's just not really something we like to see. Again, not an invalidation. It's just, you know, how often do we see it? It's not very, very often, I suppose. This move to the downside here currently counts best as a corrective structure locally, compared to this being a motive wave structure, and therefore I don't like to put wave B at the current all-time high, with this already being a C towards the downside. Reason for this is that if we want to consider a bigger wave C to the downside, and this being the end of a B, this has to be a 1 and a 2, where wave 2 is 9 times longer in time compared to 1, which is incredibly uncommon. Like, that's very rare. And then in the second one to the downside here, you have a wave 4 that is shorter than the 3A2 compared to wave 2, which is also not what you like to see. It also reduces the probabilities for this scenario. So therefore, even in a bearish scenario, you preferably still move up a little bit more. And then we have the wet dream of the moon boys, right? Where you just count multi-1-2 till infinity, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, and then once upon a time you're going to get your wave 3. So in this particular scenario, you're just looking for continuation. You're not looking for your diagonal and a retracement and up, right? You're not looking for all of that stuff. You just want upside, up, 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 and the only way is up, and the only way is the moon. Invalidation is this low at 98.2K, and basically it requires us to count this move and this move to the upside as impulsive structures. Now, we can force, as you have seen all across the internet, 5-wave structures in here. This one, in my opinion, is a little bit more tricky because of the 4-2 relationship, and inside 2, the 1.618 really looks like a 3-waver compared to a 5. But then again, no invalidations. We are at least aware, right, of this scenario. And if price moves to the upside, mind you, the direction is the same in both the diagonal and this scenario. You're still looking for price to take the all-time high in an extended 5 and continuation up. Bearish scenario preferably takes out the all-time high. Diagonal preferably takes out the all-time high. So in other words, if price takes out the all-time high, we just observe, right? We let price come to us. We're not trying to like force price into our own ideas. We have our ideas, we know what we're looking for, but we have to let price do the work. And then if price takes out the all-time high and volume is significantly increasing, big extensions, and we just continue up, hey, I mean, probably everyone is happy, right? But if that's not the case, and you're getting a 3-wave structure and price starts halting and slow and starts to move down in motive wave structures, I mean, you know, change the structure, that's a problem. Now we're going to be looking for a bit of a retracement. So we just got to wait a bit. Now, also something that I noticed is, you know, of course, with the multi-1-2 scenario in the absolute moon scenario, right? People talking about multi-1-2s. It made me think a little bit about 2021. So in 2021, price moved up, decreasing volume as well. And I was not good enough yet I just started my journey really at this time, so I wasn't really paying attention to too much Elliott waves and stuff. But I wonder, and I haven't checked it, if people were counting this as a multi-1, 2 as well. No, I don't know. I haven't checked it, but 1, 2, 1, 2, 1, 2. I don't know. Maybe someone did, but then afterwards you got a over 50% decline. So just be aware. This was right a diagonal. I do count it different. Instead of a diagonal, I count it as 4 5s. Let me show you. So yeah, it's messy. It's not really for this video, but you know, 3 4 3 4, and then eventually afterwards we move down, right? But still, it has a diagonal shape on a decreasing amount of volume, right? And it's not a multi-1, 2, right? We didn't move towards the upside. Instead, we went right to the other side. A multi-1, 2, right, preferably is something that you see at the beginning of a motive wave, right? The beginning of a bigger impulse. You have your wave 1, your 2, your 1, your 2, right? The final 1, 2 in the previous 2021 bull market, and then boom, there you go, right? And then you start with your wave 3. I could even include this one as well. 1, 2, 1, 2, 1, 2, 1, 2, and up, right? Preferably, you see your 1, 2s at the beginning, right? The moment you start to count 1, 2s at the very end, or potentially end, because the moment you start to count 1, 2s, not necessarily at the end, because we don't know if it is the end, but if you start to count 1, 2s after a very long time in a bull market, you got to be aware that you might also consider 4 5s or diagonal structures, right? By no means we're saying it's the end already. It's just to create awareness so that you're not only thinking about the 500K targets and 300K and this and that, and upside is the only way. I go 50x leverage in my positions, right? It's about risk management. It's about the awareness that price can also take out the all-time high one more time, create a retracement, which for bulls should be corrective, after which we continue, right? Which will give a new opportunity to join. But for the bears, you're just looking for a bigger retracement below 74K. It's more about awareness, having the scenarios, right? And at the moment, this is the primary that I keep an eye on myself, with on the lower time frames, finished or a WXY, both are bullish scenarios. Now, with regards to the levels, let me just put these on the chart. If you want, you can copy them. So let's just do this. All right, so this is what I have going on my chart at the moment. Price touched the weekly naked point of control here, right, which is acting as resistance at the moment. Okay. And then we get to the probabilities, which quite simply is this. On the daily time frame, diagonal on the number 1 spot, and a bearish scenario, which still requires preferably 2 more all-time highs on number 2. And the multi-1, 2 is the wet dream of the bulls. It's just continuation to the upside. Currently also on position number 2, right? Because it requires us to count this as a motive as well as from 74K. And in the 4-hour time frame, honestly, a WXY and an ABC in both cases is a bullish scenario. So finished ABC, continuation up, don't want to change structure. WXY, which in my opinion is a very interesting scenario because it basically takes out early longers if they have their stops somewhere down here. And preferably this ends on a peak amount of volume. Is a little bit scary, but then you turn around, right? And then you want preferably a 5-wave impulse, a 3-wave retracement, and this is then a great opportunity to join and look for price to continue, right? So yeah, this is currently what's going on Bitcoin, and hopefully you find this helpful or useful. So on the left, you see a video on the simplest way to use and trade Elliott waves without even counting, and on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.